Well, first of all, I think it's worth pointing out, Morgan, that the dot plot is a little more hawkish. Your most dovish people came up towards the center or towards the median. You had some people come up and say, four people, I believe, are forecasting no rate cuts this year. It's still a median because there's a chunky 9 members right there in that 2 cuts. So they are a little more cautious. And then you can see here the market essentially had some concerns about those rate cuts this year, and now it's a little bit more confident looking at before Powell spoke and afterwards. But Morgan, one idea I have is that it's very interesting, and one of the things that might be giving the market some comfort here is Powell's clear forecast that the Fed will not be acting preemptively in any way, and that tariffs have 2 chances to not be an issue. The first is we're not going to act preemptively. And second is even if there is an impulse from tariffs into the indices or into the inflation indices, that we're not going to even act necessarily on that because we want to make sure that there's some kind of permanent, or the idea of them bleeding out from tariffed into non-tariff goods. And that, I think, is reasonably reassuring to the markets here. And then that leaves you the other side of the mandate where Powell may be more likely to move if it's clear sign that there's weakening on the unemployment side. So I think the mandate and the idea of the market thinking about where does the Fed defaulting to, I think they're still defaulting to cuts here if they can get away with it.